Morning. Today's Monday, June 5th. Hope everyone had a lovely weekend. Kind of a weird weather weekend here in Charleston. Unusually not hot for the month of June. Kind of overcast all weekend. Little muggy. Did not mind it one bit. We're kind of approaching the point where we spend February, March, April, kind of ribbing our clients from up north about how nice the weather is here. We're kind of approaching those hot and humid months here where you don't even want to go outside. So a weird weather weekend in Charleston to kind of go with a weird and murky jobs report. Before we dive into that, U.S. debt ceiling issue has been resolved, or at least punted to January of 2025, which is good news. You saw the default premium investors had built into the front end of the curve there completely disappear. Bonds were trading 2 weeks ago at that 7% high, which was kind of factoring in like the default premium that's in there. They're trading back down to roughly 5%. Those murky jobs numbers I was referring to, economy added roughly 340,000 jobs in the month of May, which was significantly higher than expected. The forecasted number was roughly 200,000, 195,000 jobs. It's what they were expecting in May. And where these numbers get murky is household employment actually fell by 310,000 jobs in the month of May, which you would kind of expect those numbers to move in step, at least a bit. Everything I've read from different economists and jobs experts is that this is more of a abnormality than it is the new norm. But it does put the Fed in kind of an interesting place for the June meeting. We're roughly a coin flip as to whether they're going to pause rates or move them in one direction or the other. We are expecting rates to at some point the Fed to pivot and start lowering rates after a roughly 500 basis point hike in the past 12-ish months, 18 months. We will see. Questions, thoughts, concerns, please do not hesitate to reach out, and have a great week.